2025 is now halfway complete. And what a year it has been so far in the market. Tariff volatility roiled the markets in April, and buying or even just holding on tested the mettle of the retail investor. But those who bought during those dips have been rewarded since the S&P closed Friday, June 27th at a new all-time high. But today, it is time to review the portfolio at the halfway mark of 2025. Welcome to the Quality Investor. 2025 started out promising, seemingly a continuation of 2024. The index reached an all-time high on February 19th of 6,144.15. This sentiment to start the year was fueled by strong corporate earnings and a general belief rate cuts were coming sooner rather than later. But Trump had been signaling to the market that tariffs were coming, and we started seeing weakness in March. By the end of the month, the S&P was negative on the year, yet the real fireworks were set to explode in April. Liberation Day, as Trump dubbed April 2nd, when he announced reciprocal tariffs on 180 countries. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. The market reacted sharply, falling over 11% from the end of March by April 8th. Both China and the EU imposed retaliatory tariffs. However, the gambit seemed to pay off for Trump as a slow trickle of trade renegotiation news began to emerge. And by May, the market seemed to be back where it started in April. May also kicked off earnings season, and some interesting themes began to appear. Many businesses reported that they didn't see much effect at all from tariffs. I did multiple videos documenting this. And inflation was seemingly under control. The earnings season in general was strong, and May saw the market rebound by 6.2%. June brought good tidings with more strong earnings and positive economic news, leading the S&P to close at the aforementioned all-time high of 6,173.07 on June 27th. Despite all of this, geopolitical uncertainty remains at a high simmer, with wars still going on in Eastern Europe and what seems like a new skirmish every day in the Middle East. So that is a quick review of 2025, but how has my portfolio performed? I want to review my sells, my buys, and discuss my general plan for the rest of 2025. This is a list of all the moves I've made so far in 2025. I'm going to start out with what I've sold. I sold out completely of two different stocks this year, United Health Group and Microchip Technology. Microchip Technology had proved to be quite the loser for me. Through the end of 2024, Microchip just kept falling due to poor earnings. Microchip is a semiconductor stock, and while the rest of the industry was seemingly starting to recover, Microchip just kept going downhill. Factories were not running at full capacity, and this caused restructuring and layoffs, and they kept adjusting their guidance downwards. There was just a lot of bad news coming out of Microchip. When I originally bought it, I thought that it would rebound when the semiconductor cycle started to rebound, but that just did not happen, and I decided to cut my losses. I sold out of my position completely in early February at a hefty loss of 25%. United Health Group is another stock I sold, and I actually did a video on why I sold that, so I encourage you to check that out. So I'm not going to get too much into it here, but I'm glad I did sell it, and I sold it over a period of a couple weeks. It was a fairly large holding of mine. However, my final sale, which cleared it off my portfolio entirely, occurred on April 8th, and a little over a week later, the stock tanked due to the news of a DOJ investigation. Again, I encourage you to watch that video, but basically, I'm very happy I sold when I did and avoided those massive losses, over 40% when all said and done on that news. And honestly, I just consider my timing there quite lucky. The next tier here is sold, but I still hold this stock. And it's ordered by my largest position to the least largest position. So Visa, which still remains a very large position in my portfolio. In fact, it is still the third largest position in my portfolio. Apple and Texas Instruments. And the reason I sold Visa was because at the time I felt Google, Microsoft, and a new buy were all trading very attractively, and I wanted to free up some cash to make those purchases. Essentially, I sold because I thought there was better opportunities out there. And the same goes for Apple. I felt like there was better opportunities in the market when I sold Apple, specifically Microsoft, and Google again, along with Applied Materials. And just recently, in fact, this past week, I sold half of my position in Texas Instruments. Part of the reason is I don't think there's going to be as much growth going forward for Texas Instruments, and I wanted to use that cash to put it in stocks I believe will perform better. But I haven't bought anything with that cash yet. And I'm going to get to that later when I talk about what my plans are for the second half of 2025. And then these stocks on the hold tier, I've simply held. I haven't bought, sold, or anything. And that's Tesla, Ulta, Costco, Vici, and American Tower. And the next tier is buy and hold. This is organized by the stock I bought the most of to the stock I bought the least of throughout 2025. And a lot of these purchases came after all that tariff volatility. I mean, I thought there was just amazing deals out there. Google, Amazon, and Microsoft. Google, to be honest, I've been adding to mostly throughout all of 2025. I feel like it's a very undervalued stock. Amazon, I added to after the tariff volatility. Microsoft, I added to early in the year, as well as after the tariff volatility. Applied Materials, I've been adding to sporadically throughout 2025, as with Adobe. Airbnb, I added to early in the year after its earnings. And both MSCI and Fortinet were additions I made due to the tariff volatility. And that's what I mentioned earlier in the intro, was that tariff volatility really offered some good opportunities. And to be honest, MSCI and Fortinet are two stocks I absolutely love in my portfolio and have really never felt comfortable buying more until that huge tariff dip. So I got to add a little bit more to these positions, although now I do think both of these are too rich. And then I made two new purchases in 2025. Like I said before, one of my sells was Visa because I felt like this was too good of an opportunity to pass up, and that was Intuit. And so far in 2025, since I made that purchase, I have been proven correct. I started buying Intuit in February. My final cost basis landed at about $587 a share and is now trading at over $775 a share. This has been an excellent stock for me and only the few months that I've owned it. And I feel like for the long term, it's going to perform very well. And just this past week, I added to MasterCard. I did a video on MasterCard earlier in this week. I feel like that they have a very good growth trajectory in the next few years. I also believe that MasterCard is one of those stocks that trades at a premium. It's a lot like Visa. So large drawdowns or really high margin of safeties are going to be extremely rare. And I do not think it is at a very large drawdown currently, but it did fall quite a bit due to the Genius Act passing the Senate a couple weeks ago. And because of that, I decided to finally jump in to MasterCard. It's been on my watch list for a while. I believe there's a lot of upside for MasterCard over the long term, and we shall see how it performs throughout 2025. So this is the portfolio movement in 2025. Let's see how the portfolio has performed this year. And here is a breakdown of my total return, my time weighted return, and my money weighted return. And I also have here on the very end the year-to-date S&P 500 return, so you can compare. The primary difference between the time-weighted return and the money-weighted return is money-weighted is basically an IRR. It accounts for the timing and size of cash flows, as it weighs the returns by the amount of money invested at each point in time. Whereas the time-weighted return, it measures the compound rate of return of an investment over time, but it ignores external cash flows. It focuses on the performance of the investment itself, as if the portfolio were held without any contributions or withdrawals. So that's an important distinction. The money-weighted return accounts for external cash flows, whereas the time-weighted return does not. So the main use case here is the time-weighted return is a better measure of a portfolio. In fact, an investment manager is who would use a time-weighted return to report to their investors. Whereas a money-weighted return is better suited for an individual investor who has full control over the cash flows in and out of the portfolio. So in that case, I like to benchmark myself against the money weighted return. However, I like to include all the returns just for the sake of comparison. It's ordered here by allocation, my largest holding down to my smallest holding. Microsoft is my largest holding at 18.5% of my portfolio, followed by Google and Visa, and then Amazon coming in at just under 10% of my portfolio. And you can see that, and this is in fact from January 1st, 2025 through June 27th of 2025. And I'm looking at my active holdings right now. So my total return in the portfolio is 22.9%. And this year, the S&P has returned 4.96% through June 27th. And just real quick, these are the year-to-date returns of the individual stocks. The total down here is the S&P 500. And my money-weighted return through the first half of 2025 is at 8.39%. And I'm quite proud of that performance. While I haven't doubled what the S&P has done, I still am outperforming the S&P 500, and that personally makes me feel good about my decisions. My best performing stocks so far this year actually are Microsoft at just under 20%, Applied Materials, and like I said, I have bought a lot of Applied Materials throughout the year because it's been trading so low. Amazon, Visa, Fortinet, as well as Intuit. Now, it's not accounted for in the money weighted return due to the date selection and the IRR, how that works, but the Intuit as a time weighted return has performed quite well at 28.4%. My total return on the stock so far is at 32.23%. Both the total return and the time weighted return are better than what Intuit stock itself has done in year to date 2025. But I have lagged due to Apple, Adobe, MSCI, surprisingly, even though I bought MSCI when it did dip a little bit, and Tesla. Tesla has been quite volatile in this portfolio. In total, it's up 56.9%, but Tesla has had a rocky 2025. And you can see the total return of my portfolio throughout the year. You can see during that April lull, because of all that volatility, it really dipped down, but has since recovered nicely. And down here is the market value of my portfolio over time throughout 2025. Remember, I'm also making contributions throughout the year. And this little dip right here is actually my Texas Instruments sell. Remember, I'm just holding cash. I have not bought any new stock yet for my Texas Instruments sell. Here, I just changed the date selection to the end of February of 2025. And I just want to show you that I started out the year not very well. You can see at that point in time, my money weighted return is negative 1.3% versus the S&P return of 1.24%. I was performing poorly mostly because Tesla just absolutely tanked in the early part of the year. It was in the high 300s going into 2025, down to 292 at this point. And through March of 2025, things were getting even worse. I was down nearly 7% compared to the S&P down at 4.5% on the year. But by the end of April, things had started to even out a bit. And that's because, like I said, I made some good buys during that tariff volatility. I knew that was going to be very short term, and I loaded up on high quality businesses because of that. So all in all, I'm pleased with my performance so far. I hope to continue that performance through the rest of 2025. And on that note, my plans for the rest of the year are pretty basic. First, I want to continue to stockpile cash. I'm building a nice cash position because right now I do believe that valuations are getting stretched yet again. I don't know if we're going to see massive corrections like we saw in April. And to be honest, I have a very small universe of stocks that I'm willing to buy anyway. So what I'm looking for is corrections to those. I don't want to time anything, but before I buy anything else, I want to wait for things to go on sale again. If I was forced to add anything to my portfolio today, I'd still be thinking about Google. I'm in the process of building up my position in MasterCard. I believe Adobe still has some value left in it. But right now, most of my holdings I think are a little bit too rich to add to at this point. So aside from making regular contributions every couple weeks when I get paid, I'm going to be selling some of my stocks. And that's the second part of my plan for 2025. I want to consolidate. I have a list here of 18 individual stocks. And I want to get that number down to less than 15, ideally between 10 and 12. I don't know if I'll get there this year, but a few of the stocks on the list to sell off completely are Texas Instruments, Apple. While I believe Apple is still an amazing business, they generate by far the most cash flow of any business in the world, but it's hard for me to see any real growth catalyst that will return Apple to 10+% growth per year. Google's still growing at over 10% a year. Microsoft is doing that. Nvidia is lapping the field right now in growth. But all the Mag 7 businesses seem to have a growth catalyst in store over the next decade, with the exception of Apple. So I want to sell out of my Apple holding altogether and apply that cash into stocks I believe will perform better. And the two other stocks on my chopping block right now are Vici Properties and American Tower Corporation. I'm very much on the fence about both of these. I like both positions. They provide me very good dividends, which is why I bought them in the first place. And I believe of all the REITs, these are the only two REITs worth owning. And I still think both of these have a lot of growth trajectory. I just think that there's better opportunities out there in the market. Right now, I'm building up a large cash position to deploy when I think some of these businesses in my universe become on sale again, as well as consolidating down to a portfolio of less than 15 stocks. I would love to know how the performance has gone for all of you out there. 2025 has certainly been a volatile year, but it's shaping up to be a good year yet again, if not the equivalent of 2023 and 2024. I still think we're going to end the year strong.
Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.